Hello students, welcome to the lecture on aviation insurance. Learning, and after this lecture we will be able to learn the following objectives. Describe history of aviation insurance. Define the types of aviation insurance. Explain the aviation insurance industry in India. Understand the boilers and pressure plants. Let's start with some introduction. Aviation insurance is insurance coverage geared specifically to the operation of aircraft and the risks involved in aviation. Aviation insurance policies are distinctly different from those for other areas of transportation and tend to incorporate aviation terminology as well as terminology, limits and clauses specific to aviation insurance.
Hello, I'm John Harden, founder and president of Aviation Insurance Resources. If you're a personal aircraft owner, corporate aviation operator, or part of the aviation industry, we want to work with you to minimize your liability exposure and protect against loss as you enjoy and work within the aviation industry. At AIR, we understand what it is to be a pilot and an aircraft owner. Many of our staff, including myself, are aircraft owners and pilots, and have worked in the aviation industry for many years. We know intimately the challenges and potential liabilities that come with participation in the aviation industry. Our core values focus on providing that one-to-one service experience to each of our clients. Whether you're an individual owner, a large corporate operator, a flight school, flying club, maintenance shop, or airport, we're experts at matching your aviation insurance needs to the right coverage by the best insurance carriers at the best price.
Let us discuss about history of aviation industry. Aviation insurance was first introduced in the early years of the 20th century. The first aviation insurance policy was written by Lloyd's of London in 1911. The company stopped writing aviation policies in 1912 after bad weather, and the resulting crashes at an air meet caused losses on many of those first policies. The first aviation policies were underwritten by the marine insurance underwriting community. The first specialist aviation insurers emerged in 1924. In 1929, the Warsaw Convention was signed. The convention was an agreement to establish terms, conditions and limitations of liability for carriage by air. This was the first recognition of the airline industry as we know it today. In 1931, Captain Lamplugh, the British Aviation Insurance Company's chief underwriter and principal surveyor, said of the new industry, "Aviation in itself is not inherently dangerous. But to an even greater degree than the sea, it is terribly unforgiving for any carelessness, incapacity or neglect." Realizing that there should be a specialist industry sector, the International Union of Marine Insurance (IUMI) first set up an aviation committee and later in 1933 created the International Union of Aviation Insurers (IUAI), made up of 8 European aviation insurance companies and pools. The London insurance market is still the largest single center for aviation insurance.
Talking to Steve Doyle, Business Development Director for Willis Global Aerospace. Steve, your team recently produced the Willis Airline Insights Report, and in it one of the main findings was that we are at a 5-year low in terms of losses in the aviation industry. I mean, that sounds like good news for our clients. What are the causes?
It's fantastic news for our clients, it's fantastic news for the market, it's fantastic news for travellers, really. One of the main causes, new technology, really. Safety and the investment in safety over the last few years, even in the economic downturn, has been significant. New aircraft have been introduced in the global fleet, and new technology, provided the infrastructure is in place, leads to safer operations. It really is as simple as that. The challenge we have is that it's a catastrophe business, so that situation could change overnight.
And what is the insurance market like for aviation at the moment? Is it the same as sort of the rest of the industry, is very soft?
Well, the market is very soft. The market drivers of capacity and claims, we talked about claims, there aren't many of those. There is plenty of capacity out there. Certainly for the types of risks that are developing, the low-cost carrier risks are becoming much, much bigger, require lower limits, very consistent fleets. So when you get to the higher profile risks in terms of the legacy carriers, higher limits with the largest aircraft, the capacity becomes a little bit more squeezed, but generally they're the high profile risks that people want to participate on, and they would consider them core accounts to their overall portfolio, and therefore the desire to participate is balanced by the reduction in capacity.
And what type of loss or what size of loss would it take to turn the market? Are we talking a series of major losses or just sort of one?
I think it would need to be a series of aviation losses, and the question therefore is how long that series of losses would be. We can be pretty certain that one loss will not change the aviation market, but the aviation market represents a niche part of many insurers' portfolios, and therefore the aviation market will largely be dictated to by the rest of the global insurance market. If there is a hardening in the insurance market, then the aviation market will harden as a result. In its own right, I don't think the aviation market is going to change through the loss pattern development in its market over the next 2 years.
You mentioned low-cost carriers, and I know you were in Ethiopia recently for an air finance conference, obviously where there's a lot of appetite for low-cost airlines. I mean, is that a huge growth opportunity for the industry? What did you have to say at that event?
Well, I think emerging markets and are growth areas for the industry anyway, whether you look at Africa, whether you look at Asia. The introduction of new technology with a 787 aircraft is going to allow people to change their operations. We're talking about European airlines flying long-haul, low-cost. Asian airlines are already doing that. And as people become accustomed to low-cost travel, then they're prepared to go further and further. So there's going to be some changes in people's travel pattern, and the aircraft are designed to meet those changing needs. There's still going to be a need for a full-service airline and large aircraft carrying people between the major global economic hubs. But technology is being introduced and aircraft are being introduced to open up more city pairs around the world. It does change people's risk profile, and that needs to be factored into our overall understanding when we're placing a client's program. But the desire for air travel is huge around the world and will continue to be so.
Obviously, fuel price is a big issue for our clients. I mean, what is the feedback you're getting on that? I mean, how high can it go?
Well, I think when we look at the fuel price, we're in a situation where there's very little that the airlines can do to control their fuel expenditure. It's a significant part, the most significant part of their expenditure. But what that actually does is puts more pressure on the cost that they feel they can control, one of which is their insurance protections. So it brings a greater focus. Whilst it might be a small percentage of their overall costs, it can actually represent quite a significant part of their overall profit. So the management of the insurance costs is very significant. In terms of where the fuel price can go, I think there's a lot of other people who would like to be able to answer that question. I don't have a definitive answer for you on that one.
No problem. Going back to the insurance market, it's obviously it's an attractive market. It can help insurers diversify their portfolios. Are you seeing a lot of new players coming in, or is it the established players?
We are starting to see some new players coming in for exactly those reasons.
So overall, a really good buyer's market at the moment, and for the last couple of years.
Undoubtedly a buyer's market, and will continue to be a buyer's market for the foreseeable future.
Let us study about types of aviation industry. Aviation insurance normally covers physical damage to the aircraft and legal liability arising out of its ownership and operation. Specific policies are also available to cover the legal liability of airport owners arising out of the operation of hangars or from the sale of various aviation products. These latter policies are similar to other types of liability contracts. Aviation insurance is divided into several types of insurance coverage available. Public liability insurance. This coverage, often referred to as third-party liability, covers aircraft owners for damage that their aircraft does to third-party property such as houses, cars, crops, aircraft facilities and other aircraft struck in a collision. It does not provide coverage for damage to the insured aircraft itself or coverage for passengers injured on the insured aircraft. Passenger liability insurance. Passenger liability protects passengers riding in the accident aircraft who are injured or killed. In many countries, this coverage is mandatory only for commercial or large aircraft. Coverage is often sold on a pre-seat basis with a specified limit for each passenger seat. Combined Single Limit (CSL). CSL coverage combines public liability and passenger liability coverage into a single coverage with a single overall limit per accident. This type of coverage provides more flexibility in paying claims for liability, especially if passengers are injured, but little damage is done to third-party property on the ground. Combined Single Limit Liability cover for a total amount covering carrier's entire liability includes general legal liability, third-party legal liability, passenger legal liability, registered baggage or unregistered baggage in the charge of the passenger, cargo legal liability, mail legal liability. These liabilities result from the operations the operator is set up to perform and are normally the subject of a contract of carriage like a ticket or airway bill. Ground risk hull insurance not in motion. This provides coverage for the insured aircraft against damage when it is on the ground and not in motion. This would provide protection for the aircraft for such events as fire, theft, vandalism, flood, mudslides, animal damage, wind or hailstorms, hangar collapse, or for insured vehicles or aircraft striking the aircraft. The amount of coverage may be a blue book value or agreed value that was set when the policy was purchased. Ground risk hull insurance in motion. Taxing. This coverage is similar to ground risk hull insurance not in motion but provides coverage while the aircraft is taxiing but not while taking off or landing. Normally, coverage ceases at the start of the takeoff roll and is in force only once the aircraft has completed its subsequent landing. Due to disputes between aircraft owners and insurance companies about whether the accident aircraft was in fact taxiing or attempting to take off, this coverage has been discontinued by many insurance companies. In-flight insurance. In-flight coverage protects an insured aircraft against damage during all phases of flight and ground operation, including while parked or stored. Naturally, it is more expensive than non-in-motion coverage since most aircraft are damaged while in motion. Hull all risks. The hull all risks policy usually pertains to chances of physical loss or damage to the aircraft. These policies are subjected to a standard level of deductible uninsured amount borne by the insured, applicable in case of partial loss. This deductible presently ranges from INR 25 lakh to INR 5 crore. The term all risks can be misguiding, and it should be cleared that the term is not subjected to any kind of consequential loss or loss of use and delay. The term addresses to the restoration of the aircraft to its previous condition before the loss. Hull spares war risk insurance. The hull all risks policy will contain the exclusion of war and allied perils. Generally speaking, throughout the aviation insurance world, war and allied perils have a defined meaning. In the London aviation insurance market, the standard exclusion is called the war, hijacking, and other perils exclusion clause. This lists and defines these so-called war and allied perils. War. This includes civil war and war there is no formal declaration. The detonation of a weapon of war employing nuclear fission or fusion. Strikes, riots, civil commotions and labor disturbances. Political or terrorist acts. Malicious or sabotage acts. Confiscation, nationalization, requisition and the like by any government. Hijacking or any unlawful seizure or exercise of control of the aircraft or crew in flight. Liability insurance. Liability is basically categorized in two aspects. With regard to passengers, it is limited to baggage and cargoes carried on the aircraft. The second aspect is aircraft third-party liability, which is the liability for any sort of property damage or to the people outside the aircraft. Hull total loss only cover. Hull total loss only cover is subjected solely to total loss of the aircraft and is particularly formed for the old aircrafts, as the condition of such are very poor and are insured for low amount, the premium of which would also be very low. The portion of partial losses to total losses in case of such aircraft is very inadequate. Exceptions under aviation insurance policies. There are a number of exceptions which apply under an aviation insurance policy. Following is a list of some of the common exceptions: wear, tear and gradual deterioration, ingestion damage caused by stones, grit, dust, ice, etc., which result in progressive engine deterioration, considered wear and tear, mechanical breakdown, claims arising whilst the aircraft is being used for any illegal purpose. Claims arising whilst the aircraft is outside the agreed geographical limits unless due to force majeure. Claims which are payable under any other insurance. The hull all risks policy will pertain to the exclusion of war damages. Noise and pollution unless resulted from crash, fire or any kind of explosions registered inside the airplane. Any kind of loss incurred by the own property of the insured. Analysis of the global aviation insurance market in 2009 to 2010. At the beginning of the year 2009, the aviation and airline industry itself was in disarray, and the depression seemed to be harbinger of death for the aviation insurance industry. For without airlines, what would be left to be insured? However, a recent market study has shown that this has not been the case. In terms of airlines ceasing operation, overall the industry appears to have weathered the economic storm relatively well so far, despite the many augurs of doom being delivered 3 years ago. According to the data that was studied from the insurance markets, just over INR 800 million has come out of the lead hull, and liability premium total so far this year as a result of airlines going out of business, joining group programs or seeing their AFV drop below INR 7,500 million, the criteria for inclusion in the data set. Let us discuss about aviation industry in India. Indian insurers have come a long way in developing the market capacity for aviation insurance businesses, and as India's growth story continues, insurers have kept pace with the growing demand from buyers in India. Today, the Indian market is playing a key role in supporting not only buyers in India, but also buyers in the subcontinent, including major support to the SAARC region. As the Indian aviation industry continues to grow, many new buyers have entered the insurance market with requirement for different types of products. Apart from traditional airline and aircraft-related insurances, insurers are now covering different verticals of aviation industry, ranging from airports to aircraft manufacturers with bigger risks appetite. Aviation insurance is India laws and regulation. The Indian government ratified Montreal Convention 1999 in March 2009, and currently it applies to international travel. There is nothing on record at this stage to show that the revised liability limits are applicable to domestic sector INR. In brief, the convention has increased compensation levels for international passengers in the event of death or bodily injury and damage and delay to the passenger baggage and cargo. While the compensation for death or bodily injury has increased almost 7 times from the existing levels of approximately USD 20,000 to around USD 140,000, the compensation for damage to checked baggage has increased from approximately USD 20 per kg to around USD 1,400 per passenger. The compensation for damage to cargo has increased from USD 20 per kg approximately to USD 24 kg. The Warsaw System, which is in force in India by way of Carriage by Air Act 1972, had allowed 4 choices of jurisdiction for filing of a claim by the passenger, namely place of issue of ticket, principal place of business of the carrier, the place of destination of the passenger, and the place of domicile of the carrier. Through the Montreal Convention, a 5th jurisdiction is added, which is the place of domicile of the passenger, provided the airline has a presence there. Therefore, an Indian would be able to file claim in India even if the journey was undertaken outside India. Western European countries, including countries in the Far East, namely Hong Kong, Singapore, have adopted regulations specifying minimum liability insurance limits for aircraft based on the maximum takeoff weight of the aircraft and passenger seating capacity. However, India is yet to adopt any such regulations. Aviation insurance in India, latest data and trends. Aviation's direct premium income in India is circa INR 3,750 million, and this includes buyers from all segments including airlines, general aviation, aerospace, airports, ground handlers, catering companies, etc., but excluding satellite. Over 75,000 of the total premium comes from the airline segment, with another 23% from general aviation. A very small portion of 2% is contributed by airport, ground handlers, catering segment, etc. In addition, National Reinsurer GIC rewrites substantial international aviation business, mainly by way of inward reinsurance, coming into the country, and gradually other insurers are following suit, but with caution. Over the last 10 years, GIC has emerged as one of the largest aviation reinsurer in the international market and is playing a key role in supporting Indian Insure INR. Currently, there are over 200 buyers of aviation insurances in the country who need aviation products in one form or other. Many new buyers have entered the market in 2008 to 2009, and the trend is expected to continue in 2010 to 11, albeit at a slow pace. For the airline sector, customer base and number of aircrafts has increased significantly in the past 3 years, but current economic situation is taking a toll on its future growth. Global aviation insurance, what lies in store? What then is the outlook in the year 2011 and ahead? The short answer is that it very much depends on the level of claims for the rest of the year. Fundamentally, the airline insurance market is healthy at this point. Capacity is strong, and as a result, following markets can be used to generate enough competition to ensure that the cost of insurance is fairly closely aligned to the risk being represented. At the same time, the market is perilously close to suffering a 4th consecutive year without return. There is now very little room for man-over, and further losses are likely to confirm 2010 as a loss-making year for the airline insurance market. If this is the case, then commitment to the sector may fall in 2011 and prices could rise as a result. What this means for airlines renewing during the final quarter of the year, as stated earlier, is that negotiations are likely to be tough. Underwriters are going to need to be convinced of the merit of an insurance program before they commit to supporting it, let alone offering reduced prices. Let us move further and discuss about boilers and pressure plants. The boiler and pressure plant BPP insurance policy covers physical loss or damage to all types of boilers and or other pressure plants where steam is being generated. The policy covers for physical loss or damage to boilers and or other pressure plant against unforeseen and sudden physical loss of or damage due to explosion or collapse of the insured items. The policy covers boiler and other pressure plants against the following contingencies: damage to the boiler and or pressure plant due to explosion or collapse, damage to other property arising out of above accident on payment of additional premium. Legal liability towards damage to third-party property and or personal injury arising out of above accident on payment of accidental premium. Main exclusions. The policy does not cover loss or damage in respect of fire and allied perils, war and nuclear perils, overload experiments, gradually developing flaws, defects, cracks, partial fractures, wear and tear, failure of individual tubes unless resulting in explosion or collapse, loss for which the manufacturer or supplier or repairer is responsible, willful act, willful damage or gross negligence. Erection all risk. The insurance covers all types of risks involved in the erection of machinery, plant and steel structures of any kind, as well third-party claims in respect of property damage or bodily injury arising in connection with the execution of an erection project. Coverage is on an all-risks basis and in particular includes fire, lightning, explosion, aircraft damage, riot, strike, malicious act, flood, inundation, storm, cyclone and allied perils, landslide, subsidence and rock slide, burglary and theft, faults in erection, human errors, negligence. Main exclusions: loss or damage due to faulty design, defective material of casting and or bad workmanship. Manufacturing defects: loss or damage due to willful act or willful negligence. Consequential loss: loss or damage due to war or warlike operations. Contractor all risk: as a building contractor or developer, we would need to protect capital investments against loss or damage to the work in progress or materials purchased for the purpose of incorporating into the project. In addition, we would also need to protect liability against third-party claims arising from the construction activities of the works. The policy offers coverage under two sections. Section 1. Material damage. The policy covers physical loss, damage or destruction of the property due to any cause other than those specifically excluded in the policy. Section 2. Third-party liability. The policy covers the legal liability falling on the insured contractor as a result of bodily injury or property damage suffered by a third party. Main exclusions. The policy will not cover any claim related to war and related perils, nuclear reaction, nuclear radiation or radioactive contamination, willful act or willful negligence of the insured, cessation of work, faulty design, consequential loss, machinery breakdown. The policy provides financial protection in the event of an unforeseen and sudden physical damage of the insured machinery that occurs owing to any cause other than those excluded in the policy and which makes immediate repair or replacement necessary breakdowns. Main exclusions, special exclusions. The access as stated in the policy schedules: loss of or damage to belts, ropes, chains and all operating media. Loss or damage for which the manufacturer or supplier or repairer of the property is responsible, span. General exclusions: loss, damage and or liability arising directly or indirectly due to fire, lighting, explosion, theft, subsidence, landslide, flood, inundation, storm, earthquake, volcanic eruption or other acts of God, etc. Loss, damage and or liability caused by or arising due to war or warlike operations, nuclear reaction, radiation or radioactive contamination, loss or damage resulting from overload experiments or tests requiring the imposition of abnormal conditions, gradually developing flaws, defects, cracks or partial fractures, etc. Deterioration of or wearing away out of any part of machine, electronic equipment, The policy provides comprehensive coverage against unforeseen and sudden physical loss or damage to electronic equipment and data media. The policy covers material damage equipment, example computers, microprocessors, systems, software, external data media including information stored thereon, and increased cost or working resulting from accidental loss or damage. To main exclusions, the policy does not cover any loss or damage due to war or warlike operations, nuclear perils, willful act or willful negligence, wear and tear or gradual deterioration due to atmospheric conditions, aesthetic defects, consequential losses, covers loss or damage to plants and machinery. The policy provides comprehensive cover against physical loss or damage to the plant and machinery due to any cause other than those specifically excluded in the policy. Main exclusions. The policy does not pay for certain contingencies, damages. Excess amount specified, any contractual liability or manufacturer's guarantee, terrorism unless specifically covered, war, warlike operations and nuclear perils, damage to exchangeable tools or parts, any fault or defect existing at the time of commencement of the policy, gross negligence, loss or damage discovered only at the time of taking an inventory. Now in the end, let us summarize what we have learnt in this lecture. Aviation insurance policies are distinctly different from those for other areas of transportation and tend to incorporate aviation terminology as well as terminology, limits and clauses specific to aviation insurance. Combined single limit CSL coverage combines public liability and passenger liability coverage into a single coverage with a single overall limit per accident. In-flight coverage protects an insured aircraft against damage during all phases of flight and ground operation, including while or parked or stored. The hull all risks policy usually pertains to chances of physical loss or damage to the aircraft. The boiler and pressure plant (BPP) insurance policy covers physical loss or damage to all types of boilers and or other pressure plants where steam is being generated. This coverage is similar to ground risk hull insurance, not in motion but provides coverage while the aircraft is taxiing but not while taking off or landing.